We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. I'll ask for returns for you guys to smash that like button, and let's see if we can get this video over 30 likes. And here we are with the SPY, the S&P 500 index. What a volatile day, and what a big drop after breaking out of this consolidation here within the 380s, right? And now we're below 380s, and today within the volatility towards the FOMC meeting, our SPY bot at 2:05 p.m. sent out a bear indicator, and from that moment forward, outflows crossed and put options went up 200% plus. Now, momentarily after, inflow started to pick up, and our SPY bot sent out a bull indicator at 2:40 p.m. And then from that moment forward, call options went up 300% plus within minutes, guys. What a volatile day. And if you guys want to receive this clarity and edge over the charts, check out the link down below in the description to the 42 vision indicator, getting connected to our SPY bot, the QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities. And this is my opinion and perspective alone. Volatility is here to stay, and to be able to maximize within the volatility, having a clarity and edge makes all the difference. It does not have to be 42 vision, but if you find value in what we share here, you're more than welcome to join us and join a community of members using these resources to maximize in either direction by receiving this clarity and edge over the charts. Once again, that link is down below in the description. So the SPY, big run here all the way up towards 389, and very interesting enough, it rejected a key resistance level that had formed back here on September 19th when we hit a rip area here on the transitions of 42 vision from the dip to the rip, fell back down, and today it reached it and rejected just as fast, and it broke through key support levels of 382, 380, and here we are in the 370s. Now, we have a lot to talk about what this rate hike means moving forward and what impact it has over the markets and what my thoughts are. But before we do, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. And as you see popping up here on the screen, these are some of the home runs I've managed to find this week alone. And while it's not guaranteed to be this way every single time, we strive for opportunities like these every single day. So the opportunities I mentioned this morning nearly reached home run territory. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So these are the two stocks I mentioned this morning, both of the game jumps of 5 to 10%, 10 to 20%, and one of them almost reached 20% plus, and that was EVAX. We caught this one in the pre-market under a bull indicator, full strength on 42 vision, sitting sideways, and the inflow stayed above the midpoint, and they switched from red to green, full strength on the inflows towards the bell, and even going into the bell, full strength on 42 vision, and it gave a highest point of 18% plus within minutes, guys. If you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. So here we are with the SPY, and the S&P 500 index had a major drop, right? From the 380s, it broke through a key support level that we've talked about, which was 382, and we kept on ranging within this area, rejecting as we got closer to 390, coming back to 382 and bouncing off of it. And today, it actually broke through it. The question mark is, could it continue? And what is the data that drove such a drop if 100 basis point hike did not happen? A lot of people were expecting that 0.75 is already priced in. And we're going to break that all down in today's video. And we're going to look at key levels. But I'm going to pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected to the SPY bot, the QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. And slots are now open for those interested. The link is down below in the description to the 42 issued indicator and the inflow versus outflow. So the SPY was under a bull indicator in the pre-market, and it went from 384 all the way up to 387, and the inflows were here slightly above the midpoint. Now, towards the meeting, right, of the FOMC, the bear indicator popped up, outflows crossed, and within the volatility here, as you see it, it peaked right back up, and quickly, once it crossed and switched from green to red, and that bear indicator stayed true, no bull indicator confirmed to cancel it. If not, this continued to dominate. Things fell from 389 all the way down to lows here of 377. And in the aftermarket hours right now, we are at 376. We're going to zoom out and look at different time frames and also zoom in with the 15-minute and see what happened within the volatility. But let's talk about why the markets reacted this way. If everyone was expecting 0.75 to be a better case scenario than a whole 100 basis point hike, well, it has to do with this information right here. The federal funds rate projection for the first year actually spiked up almost a whole entire point that no one's really noticing right now, right? But Jay Powell got asked a few questions, and it kind of gears towards this information here. And he said in a very subtle way that the rate hikes are going to continue and that they're going to go based off the data if they have to continue to do 0.75 or 0.5, which kind of hinted all of this. But this is the main thing, right? The whole entire projection went up nearly a whole entire point. This is what they were looking to be at within a year from now, if necessary. And right now, the actual was 4.6, right? That's their projection moving forward. That's a big spike. And if you really think about it, the last time a big spike like that happened was in March to June. And then now in September, another whole entire point is pretty big. Meaning that they keep on telling us, hey, this was the benchmark before, but now I think we're going to have to raise rates a little bit more. So it means that the pivot that everyone's looking for hasn't even came, and it's nowhere close, right? That Fed fund rates are going to continue to go higher, and that the interest rates are still in process of doing their work, right? Over inflation and so forth, creating uncertainty, fear, and doubt, and some pricing in that needs to be done that the market might have not priced in just yet. A lot of people state that 360 on the SPY has a lot of things priced in, and it was even pricing in 100 basis points, which I've talked about that in my previous video, how that was impacting the charts. But here we are, no 100 basis point hike and falling as if such information came out. And it has to do with the federal funds rate going up, the projection so much at such a fast pace, meaning that we're not done hiking. So here we are with further volatility in the SPY, the 30-minute, the outflows cross, bear indicator, and I'm going to be watching the 15-minute going into tomorrow as it started here to get some inflows on this dip and see if it can come back up towards the midpoint, or if it comes up and rejects it, meaning that it's going to be a fake out. And if this bear indicator continues to hold true and no bull indicator pops up, it could come back down and retest those lows and hit even newer lows. And the next point is 372. And then below that is the 365 mark and the lows of the year, which is 362. The volatility is going to be immense in my opinion. And if inflows do cross and they come all the way back up, well, we're going to be looking for a bull indicator in the process that can cancel out this bear indicator and then roll over into the 30-minute with strength and get it back over the midpoint as well. Get this bear indicator canceled and continue upwards. In yesterday's video, though, I did point out how the 1 hour was looking, and the 1 hour was slightly above, and I was going to watch if it could hold above and continue, or if it was going to switch from green to red and go ahead and cross that midpoint. And exactly that's what happened after the FOMC meeting and right into it, right? And it fell, and things have fallen from 389 all the way down to 376. We're way down here at levels of -12. And the last time we kind of bottomed out, which we fell really fast from 415 to 392, we had hit on the inflow versus outflow -15. So I'm going to be watching that if we kind of slow down around this area or anywhere above it, or if we continue to break through it and go even further down as we're in a dip area here based off 42 vision, and we are under a bear indicator since yesterday on the 1 hour. So I'm going to be watching these levels very, very carefully, and the exhaustion could be in, or it could just be the beginning of even further turbulence to the downside. And like I said, first support is 372, below that is 365, then the lows of the year, and to the upside, we want to see this get back above 380 and then above 390 in the process. I look forward to seeing your thoughts down below. As always, guys, thank you guys so much for watching, and let's make some money.